Okay, welcome to the Swing Trading with Cycles channel. Today we're going to review natural gas, and this is one of our live videos. It is about just a little before 1 p.m. Eastern Time. So we're going to see some live market action. Again, we're going to review natural gas. It is December 19th, 2022. So we have only about 9 trading sessions left, this one included, for the year. And if you haven't seen a previous video, definitely take a look at the link in the description. To just kind of get up to speed. I talked about big picture, what we're looking at for natural gas. In this case, for this video, we're gonna focus on just kind of the near-term picture. And if you're not familiar with cycles analysis, definitely take a look at that content as well. Super helpful. It's simple. Prices trend. Cycles allow you to better categorize those trends. How long did the rally last? How long did the decline last? The market just moves from swing low to swing high to swing low to swing high, on an endless loop, right? And cycles allow us to understand that. So we're going to look at the weekly cycle and the daily cycle, and we'll also just kind of talk about the context. Well, let's first talk about the context of a longer term cycle. So shorthand, as I just said, cycles kind of help you quantify a rally, right? And so in this case, we've had this long-term rally since June 2020, where we rose for 26 months, right? So our top was August of 2022, right? So you can see we've been in an uptrend, holding, higher high, higher low, higher high, higher low, right? And that's how you quantify it, right? This is a swing low. If you're not familiar with that, I have a whole video about that. You definitely want to make sure you're familiar with swing lows. That's how the market bottoms. That's how an uptrend begins. So from this swing low, we have this uptrend that started and it kept going. And I called month 26 the high because that's when we made a swing high. So I also have an entire video about that. That's how a market tops. This is your swing high on month 26. And how is it a swing high? You have a swing high when you break below the low of the candle that marks the high. This candle's high is $10.02. Its low is $7.53. So once we move below $7.53, that was a swing high. Think about it conceptually. It means anyone that bought on this month here, the month of August, when we made that new high, there was euphoria. People were happy. Prices are going up, up, up. They've been going up for 26 months. Anyone who bought on that month, right? Or I should say any buy that happened on that month is now underwater. Think about that, right? Like if the lowest price that was offered was $7.53 for that month, you can't, once you move below that price, all of these buys are underwater, and as we keep making more swing highs, we continue to see that condition where the previous period, you essentially have a lot of people with losses, and you have to kind of make a decision, right? Like, are we going to continue to take losses? Are we going to sell? And that becomes just upward pressure, potential supply. And so this is your monthly chart, and you can see, again, that's your big swing high, and then we actually make another swing high below here, right? And we're down below that price. That's about $6.60, is it? Wait, let's see. $6.52, right? And so, and we broke down below that, with this move, I think today or early last week. And so the next kind of level is to make a low below go back and make a low below the November candle, which is $5.61. We're not far from that now. That's our next kind of potential target. And let's look at what this is doing for the quarterly chart. That's the other important piece. The higher the time frame, the more significant. So we want to kind of understand what's happening on the quarterly chart. We have a swing high on the quarterly chart if we break back below this area here. So you can see this cluster of lows. So that's approximately $5.30. I think, this is your gateway to potentially 360 down to these areas. So that's the big picture. What about short term? What about tomorrow, next week? So we're in a daily cycle. You can see these daily cycles labeled, right? This one was 37 days. This one was 24. This one was 21. This one was 33. This one here was 30. We had a top on day 22, and then we moved down into a daily cycle low on day 30. So we've started a new daily cycle, and today, Monday, December 19th, is day 9. So far, the high has been day 5, which is a crazy coincidence because the high for this cycle was day 5 as well. And just look at how bearish this cycle was, right? Good way to think about that. We rose, and we're going to review KOLD today, KOLD. since that's the inverse. Now that we're kind of starting a little downtrend here. So we rose 18%, and then we declined 47%. That sucks, right? This cycle here then rose, that was a healthy rally, 56%, and then declined about 30%. So we didn't give all of it back, which is healthy. And so now your question, like, now the real question on your mind is day 5 really the cycle top like it was for this? And if you notice, obviously there's variability in these cycles. Sometimes they're a little bit more than 30 days. Sometimes they're closer to the 20-day range. So let's be optimistic, and let's say that this cycle is going to end in, let's just say 20 days is a round number. That would give you a low on, and this is just a scenario, ballpark, January 5th. So call it the first week of January. So not very far from here. And so you can kind of imagine a world where I'll just move this down, right? So you can imagine a world where we sort of work our way lower here, like, you know, we'll make highs along the way. That's how it works, right? I'm not predicting a specific price level by any means. Just the point is, we'll move down in this kind of stair step fashion until we get our low, and then we'll bounce out of it the same way we bounced out of this one. It'll just be a question: are we going to hold this low here? Considering this is already day 9, and so that means we're expecting another 10 trading days of decline at least. It seems hard to believe we're going to hold this low here. So you imagine we break that, and when we kind of challenge this low here, and it's going to be a question: does this hold? Right? That's the big question. So downtrend forming on the daily chart, pretty clear. Once we broke down from this consolidation box, right? I mean, we talked about this in the previous videos. Look how we just we gapped up, then we sold down, then next day we came up, even made a higher high, then we sold down again. Like, I mean, my God, the chop. I mentioned this thing is going to break out at some point, but just know the breakouts aren't always to the upside, right? Now, what I find interesting is that this move down is actually holding this. I'll get rid of this here. I drew this level. I tweeted about this earlier. And if you're not following on Twitter, definitely take a look at for a link in the description. You can kind of see this cluster of lows here, and then these lows, this high. So there's something in this kind of zone of the 580 area. And so like we haven't quite gotten there, but you can see we're trying to bounce. And let's look intraday while we're at the daily chart. You can see this is your hourly chart, and you can see this is the rebound that's happening. So if, as I always say, if there's if there's a lower wick, that means there's a rally on a lower time frame. So let's zoom into like the 5-minute chart. There it is. That's your little rally. So that's helpful to that's I think in my mind that's like really important to understand sort of at the atomic level how the candles sort of come together. These two green candles are literally that wick on the hourly candle, right? Like that's that wick. And if we continue to get upside, this candle is going to go from red to green. We don't have much time for that to happen. That candle opened at $5.94. So that's interesting. We're trying to hold some levels here, but right now, and so let's turn to the weekly chart because there's a weekly cycle as well, right? And so it appears we made a weekly cycle low back on the week of October 24th. That was a 16-week cycle, which was the cycle before that was 26 weeks. So this was technically a really short one. But here's the thing: as we start to roll over here, it's entirely possible that in hindsight it's going to become more clear that maybe this is actually just, like this is essentially another 26-week cycle, something like that, like something more like 25 weeks, right? Like, so if we go like from here to here, actually that would be like something like that. Like imagine if this ended up being about a 25-week period to kind of match the previous one, like just ballpark. So that would actually mean a low pretty soon. Interesting, right? Like if this whole thing were one cycle. The other option is that this is its own cycle, right? And let's say that this is going to be something like 20 weeks. Then you're looking at something like that. And that's why I say like it's important to think about the different scenarios and how they might play out, because you don't know what the price action is going to do. We're not fortune tellers, but if we can think about a few scenarios and then watch in real time to see what price action is doing, it might give us a sense as to what's more likely to happen, right? And so you could see a scenario like this. So we're watching for, and again, remember, we're in a daily cycle that we just talked about. You know, a short daily cycle would probably end in early January. So that tells me this daily cycle low could possibly actually be the weekly cycle low as well. And if it's not, that would tell us that we're getting this kind of scenario where it's going to be more drawn out below. So this is going to be really interesting to watch these next couple of weeks, and we'll be reporting on this channel. So as I mentioned, we're going to look at KOLD, since that is the inverse ETF. Just be aware that, you know, this is a leveraged ETF, so not something that you park money in. It's a trading vehicle. But if you look at the monthly chart, I mean, look at this. My God, massive downtrend. That's because obviously natural gas has gone on a massive run, and you can see that like these lower highs here. And so your risk is that you don't want to get caught up in another one of these, right? Like, is that what's about to happen, right? To make another leg down. So that's the monthly. But if you're trading this, you probably don't want to stick around for too long. As I said, this thing is long term headed much lower. It's just the nature of these things. But if we take it for what it's worth and look at the weekly chart, we can see that we basically bottomed out, right? There was a little 13-week cycle almost, right? And so it almost seems like a new cycle started, like, you know, let's call it at the last month of November, right? And if that were to be in the 12 to 13 week range, that takes you to like early February. And the way to think about this is, because this is the inverse, this is going to rally when natural gas is declining. So it's really a question of how long is this rally going to last. Let's see, what are some of our logical targets, I guess, on the monthly, right? So let's go back to the monthly real quick. So at this point, we really need to, So you could easily see us make a move back, even if natural gas isn't going to be totally bearish, a move back to 26.79 before kind of rolling over. This is just kind of dangerous to just the leverage nature of it in general. And I mean, again, look at this thing. But again, you could easily get a bounce there, and that would, you know, that would be perfectly normal in this kind of downtrend. It wouldn't be abnormal. Let's look at the daily chart. Let's see if there's like a very clear daily cycle picture kind of emerging. Right, so that's interesting, because this is essentially telling you that we've been in the daily cycle for a little bit, has a high on day 8, and this is day 817. Because this would be really short for a daily cycle. But I guess in that same vein, these daily cycle advances only last as long as the declines in natural gas do. So, and bear with me, I'm looking at this in real time, obviously. Right, so you have like this period right here is another good example. Well, that's a little bit longer. So what you do know is that we're working off of this swing low right here, right above, call it, what is that, $14, right? Like, and we're up here at 1760. This is technically day 4 of the rally. And if we think about it, this last rally lasted, let's see, 8 days, right? This little rally, and that's a good sort of shorthand to think about it. This little rally lasted, what is that, 11 days, right? And so this probably has more legs. And again, if we're thinking natural gas is going to decline for the next 10 days, there's no reason why we won't see something like this, maybe even make a higher high. Just, you want to make sure that you take your profits and run, because again, long term, this thing is doing something like that, right? Like, even as the price of natural gas is under pressure, this thing is just naturally going to decay as well. So you do want to be careful of that. But I'll continue to keep an eye on this. I do want to remind, in general, it looks like commodities are rolling into a 3-year cycle low, a larger cycle low. And so it makes sense that natural gas is getting kind of caught up. But do remember that this is the annual chart for natural gas, right? So it's a big green year, and there's only 8 trading sessions left, so that's not going to change. And so we're going to just have an inside year next year, as I talked about in previous videos, just inside this big range. And so there is some level of, like so to some degree, this price action is kind of chopped on the higher time frames, right? Because for all intents and purposes, we're still moving higher on the highest of time frames, but we're starting to get chopped sort of in this intermediate period. You can almost kind of think of it. So it's going to be kind of wild trading, but we'll continue to watch it. Again, we'll see how this daily cycle decline unfolds. What I'll say also though is that there is also the chance that this is like you could see a world. You always want to think about the bull case and the bear case, right? Like there's also the possibility that it does this and then continues to move up, right? That this becomes a successful back test. You want to be open to that, especially considering you got this level in the sand. It didn't kind of melt through. So we're going to be watching for that. These things could change on a dime for sure. But we'll leave it. Well, that's our update for natural gas, and we'll leave it at that. Thank you.